Hello there. Welcome to Commodities. Let's check in on the energy complex. Oil has been under pressure this week on hopes that there's some kind of peace deal is coming in Ukraine. Meanwhile, of course, low prices tend to curb supply. And Reuters is quoting Baker Hughes as saying U.S. drillers have cut their oil rigs to the lowest in 4 years. Now, we saw pressure on oil yesterday after Ukraine's president told European leaders he was ready to go ahead with a US-backed framework for ending the war in Russia. And apparently only a few points of disagreement remained. Remember, we heard from one guest yesterday that it's likely Ukraine ends up as a partitioned country like North Korea after the Korean War. Let's have a look at the metals now, because it seems to be a pretty good environment for gold. There are rising expectations that the Fed is poised to cut interest rates again next month. We also saw sharply higher silver. Look at that, silver up more than 4%. We just got U.S. jobless claims data, and they saw an actual drop in U.S. unemployment benefits. But that's seen as unlikely, not enough to dissuade the Fed from cutting again. And of course, Kevin Hassett is now seen as a contender to take over as new boss of the Federal Reserve. He's director of the National Economic Council, seen as a key advisor to U.S. President Donald Trump, and thus likely to favor interest rate cuts. Swap traders now see a chance of nearly 80% that the Fed goes with a 1/4 percentage point cut next month. And some commodity-related stories we're bringing you. CTV says the federal government will announce measures this afternoon to help Canada's softwood, lumber and steel industries. Multiple reports suggest the announcement will include more financial aid, as well as further curbs on imports of foreign steel. Those sectors, steel, aluminum and lumber, have been battered by Trump's tariffs. And let's have a look at shares in Teck Resources. The Canadian miners' proposed takeover by Anglo American has received backing from an advisory firm, shareholder advisory firm, ISS. It says the combination will produce positive strategic benefits. The deal still has to be approved by Canada, the US and China. But investors, some of them anyway, think this recommendation will help push the transaction forward. It would rank among the biggest ever in the mining industry. Shares in Rio Tinto moved higher. Bloomberg says the company is seeking to sell its U.S. assets that produce boron, a critical mineral used in applications including fertilizers and glassmaking. There's Rio Tinto stock rallying lately. Rio Tinto is expected to start a sales process in the coming weeks. Those assets include a mine in the Mojave Desert in California and processing operations, as well as a refinery and shipping facility. Let's get back to oil. U.S. President Trump coming out with optimistic remarks on progress about a peace deal between the Kremlin and Kiev. Our guest says, though, for the moment, America will probably maintain current sanctions on the gigantic Russian energy producers Rosneft and Lukoil, and could tighten sanctions on Russia next year. Let's welcome Bob McNally, founder and president of Rapidan Energy Group. Bob, great to see you. You are skeptical that a peace deal can be reached in Ukraine in the near future?
Hello, Andrew. Yes, we remain skeptical. Now, you have to give credit to President Trump for aggressively pushing a dual-track strategy with Russia. On the one hand, increasing sanctions pressure on Putin. And the market, the oil market, was very surprised when President Trump in late October imposed sanctions on Lukoil and Rosneft. And since then, we've seen the value of Russia's benchmark crude, Urals, fall relative to Brent. Those sanctions have started to have an impact. But at the same time, as we've seen more recently, President Trump is pushing the diplomatic process. So it's very much a push on both tracks to try and get a deal done. And not, but a president, we say, you can't always get what you want. I think he strongly wants to see this war end. However, in our view, we don't think Putin and Ukraine and Europe, on the other hand, are anywhere close to a settlement, to a sort of an agreement or a framework for a compromise. So we're unfortunately skeptical that this will pan out. We're more likely to see weeks of up-tempo negotiations continue. Drafts go back and forth, but we're skeptical we're going to see any kind of a breakthrough here shortly.
In theory, a peace deal is bearish for oil, isn't it? Because it would free up more Russian crude onto world markets.
A little bit, though. I wouldn't overdo it. Remember, we haven't lost that much Russian oil in terms of the production and exports into the world. What we have done is reshuffled where Russia sends its oil. There's been a much bigger impact on Russia's gas flows than in terms of oil production. So if there were to be a peace deal tomorrow, and let's say all sanctions were lifted on oil, I don't think there would be a big drop in oil prices, a few dollars a barrel. That being said, we think oil prices are heading lower as this oversupply we've been talking about in recent months develops. So the direction is down, but a unlikely peace deal with Russia, I don't think is that big of a deal for overall Russian production and therefore overall crude prices. It'll help Russia be able to sell its crude more competitively on global markets.
So you do see surpluses like many other observers, although it could ultimately flip the curve back into contango, and that is, in theory, bullish for oil, contango.
Well, contango is usually a sign that we have excess supply and that the owners of inventory space are being compensated by that contango curve to fill up their oil. So usually, normally, not always the case, but normally, contango suggests we have surpluses. And, you know, Andrew, flat prices of crude and the curve has been moving sort of down. We've been moving from backwardation since the summer toward contango. Not quite there yet. We were in contango briefly in the front of the Brent curve just before President Trump announced those sanctions on Russia, and it popped higher. So we are seeing, both in flat price and the shape of the futures curve, a trend toward a softer market. But then we do see these geopolitical headlines which cause these spikes. It could be the Israeli-Iranian war in June, Ukrainian attacks on the Russian energy system since then, and then sanctions on Russia.
What about, you think that Israel may attack Iran again, presumably going after their nuclear facilities, but I mean, the exchange of missiles and bombs between Israel and Iran this year didn't result in a spike in oil.
That's right. It was quickly followed by a truce negotiated by President Trump. So that is why I think that it did not result in a loss in Arabian Gulf production or flows, no damage to energy infrastructure. So the spike reversed. You know, one thing, Andrew, we've talked about it before. You know, since smart money is to sell or bet against a geopolitical disruption. They usually don't materialize. So the market is quickly to sell a spike if it doesn't materialize. That being said, we think there's at least 70% odds that Israel will attack. It could be Iran's nuclear facilities, also its missile capabilities, both of which it is reconstituting. And in recent days, there have been reports of aggressive testing of Iran's air defenses on its borders, possibly by the Israeli and maybe even U.S. forces. So we think toward the end of this year, early next, we're going to have another round of conflict. Again, we would assume unlikely to see major oil supply interruptions, but another round of conflict is coming, unfortunately.
Bob, we're taking a tour of the world here. What do you think will happen with Taiwan and China? Is that inevitably going to heat up, or is that a slow burn story?
I think it's a slow burn story. You know, what's going on in Beijing has just been fascinating since the summer with the plenum and the purges and the change in direction. And what we hear and understand is that China wants to take a softer course vis-a-vis President Trump, vis-a-vis the trade disputes and Taiwan. I do not think that China's leadership, not just Xi Jinping, but those other powerful forces in Beijing, liked the direction of travel. Antagonism towards the United States, sort of a big ally of Russia, pushing the electric vehicles at all costs. I think you're seeing a shift across the board in Chinese policy, including on trade and Taiwan and electric vehicles. And it's one toward, I think, pragmatism and trying to dial down these tensions. Longer term, Andrew, later on this decade, there's probably going to be a problem with Taiwan. It's a difficult problem between China and Taiwan, of course, and our allies, the United States, Japan especially. So wouldn't rule out that we're going to have a crisis down the road, but near term, I think the tensions are going down.
Bob, we'd better leave it there. I was just looking here. Apparently there is such a thing as a bullish contango and a bearish contango. And we can't get into the weeds here. But your take is that there's certainly signs of a glutted market, at least over the next few months.
Absolutely. We've seen bullish contango before. Let's talk about it another time.
Sure.
But near term, I think contango would mean that oversupply is arriving.
Bob, thank you very much. It's always great to hear from you. Bob McNally, founder and president of Rapidan Energy Group. President Trump is on a campaign to bring down beef prices, but a crisis in U.S. cattle supply is making that goal difficult. Americans will apparently pay up and keep paying for red meat. We'll be right back. Americans just keep buying beef, including ground beef, even as the price rises. A big reason for that increase in price is the cattle herd in the U.S. falling to its lowest in a half century. Let's get more from Bloomberg's Eilina Peng. Eilina, thank you very much for joining us.
Of course. Obviously, we have the situation with the U.S. cattle herd just being so small. And whenever that happens and prices surge, everyone's really keen to figure out if demand's going down. And like we saw that a lot earlier in the year with eggs, for example. At one point, eggs became pricier than beef. And so people stopped eating it. But somehow for beef, that hasn't really been happening as significantly as one might have thought.
And you cite some research from this is Kansas State University, talked to consumers. Now, American consumers in September were paying about $6.60 US a pound for beef, but they indicated they'd be willing to pay more than $9. It's such a beloved product, ground beef.
Yeah. It's surprisingly resilient demand. And obviously the price point that people are willing to pay really varies by consumer. But broadly, what we've heard is that Americans are still seeking protein and they see beef as a good source of protein. And so they're willing to keep forking that over as a share of their budgets. And if they're facing price pain, instead they go to maybe a different grocery store or they buy a smaller pack or maybe a cheaper beef product, but they aren't abandoning the protein itself altogether.
And President Trump has moved to try to bring down this increase. He cut tariffs on beef from Brazil.
Yeah, he did, which helps quite a bit when it comes to ground beef in particular. A lot of the shipments that we get from abroad are largely in the form of these lean trimmings that get blended into U.S. product to go into, for example, hamburger meat. But when it comes to things like steak, a lot of those are domestically grown. Most of the U.S.'s beef supply is produced in the country. And so those prices are probably likely to stay a little bit higher for longer.
We're just looking at the U.S. consumer ground beef price soaring. It's either in the past year or this year, it's gone up about 14%. And interesting, I mean, inflation apparently reasonably under control, but electricity, Americans are frustrated over higher electricity bills, and now beef. I just think it's fascinating. There hasn't been a wholesale switch to chicken. You mentioned there has been some substitution.
Yeah, there is definitely some substitution to chicken. The relationship between the different proteins is something that's always a little bit there. But one of the things that's interesting is the Kansas State's Meat Demand Monitor. They've actually found in research over time that chicken has become less substitutable for beef over time. And I think it's just because consumers are more entrenched in the goods that they like and are less likely to switch away, even if prices fluctuate a little bit.
I got to admit, if I make a spaghetti with meat sauce, it's got to have beef. I'm sorry. There's just no substitute. Maybe it's just psychological. I don't know.
Yeah, I think certain things are a little bit harder to switch out. And I think people have their recipes that they're used to and they like to stick with them.
Eilina, thank you very much indeed. Great story. Eilina Peng of Bloomberg. We are going over now to the Prime Minister, Mr. Carney, and he is announcing what are thought to be measures for tariff-impacted sectors.
Here today, more substantively, thank you for leading one of Canada's great steel companies, but also for helping us in designing some of these support measures that I'm going to talk about today, and some of that we put in place. This is an important day for Canada's workers. Look, we know the world's changing. We know that this decades-long process of our ever closer economic relationship between Canada and the United States has ended. And as a consequence of that, many of our strengths have become our vulnerabilities, particularly in those industries that are most tightly integrated with the United States. Headline, last year, 75% of our exports went to the U.S. 90%, 90% of our lumber exports went to the U.S. 90% of our aluminum exports went to the United States. 90% of our steel exports went there, all bound for a single market that has changed. Overall, for the Canadian economy, we estimate that U.S. tariffs and the uncertainty that they're creating will cost Canadians around 1.8% of GDP. That's about $50 billion lost from our economy, or the equivalent of $1,300 for every Canadian. And this is happening fast. It's a rupture, which means that our economic strategy needs to change dramatically and rapidly. And that change is in Budget 2025, our plan to confront these challenges and emerge even stronger, to move our economy from reliance to resilience, and to give ourselves far more than any foreign nation can ever take away. Le budget vise à bâtir un Canada fort en mettant
l'accent.
The
budget aims to build a strong Canada by placing an emphasis on what we can control. That means building here at home in order to protect Canadians and to give them the means to prosper, to strengthen our productivity, to ensure lasting wealth, transforming how the government works for you, diversifying our foreign trade partners in order to increase productivity and our independence.
The core of the strategy in Budget 2025 is to unleash $1 trillion in total investments in Canada over the course of the next 5 years. That alone will increase our GDP by over 3.5%, or $3,500 for every Canadian worker, more than twice what's being taken from us. Now, to help get there, we must protect our workers and our industries who are most exposed to U.S. tariffs. That means in steel, aluminum, auto, and lumber sectors. Help them bridge to the future. Nous avons déjà pris des mesures décisives
We have already taken decisive measures to ensure foreign exports of steel. We are going to be our best customer by buying our own steel and allowing our key strategic industries to enter new markets and protect our workers and markets that are affected by the U.S. tariffs.
Back in July, we restricted foreign steel imports entering Canada's market, expanded training and income support for steel workers, and provided liquidity relief for businesses. The government, for example, provided a $400 million loan to help Algoma Steel in Sault Ste. Marie to transition to a business model that's less reliant on the United States. In August, we introduced new measures to help the softwood lumber industry stay competitive, including financing for company restructuring, investments to diversify products, income and training supports for affected workers, and prioritizing Canadian lumber in home building. In September, we launched a comprehensive industrial strategy with new reskilling programs, a new $5 billion strategic response fund to help businesses pivot to new markets, and we announced that we would create a new Buy Canadian policy across federal agencies. We also reduced red tape and increased loan limits to help large firms access the liquidity that they need. These measures are working. We've received close to 1,500 applications from companies across the steel, aluminum, lumber, manufacturing, automotive, and seafood sectors through our Regional Tariff Response Initiative. In the steel sector alone, more than 230 firms have applied and support's already being delivered. So some examples. Because of these initiatives, Cherubini Metal Works in Nova Scotia is modernizing its metal and fabrication lines to export more products overseas. And Hooper Welding in Hamilton will grow its capacity to produce fabrication equipment required for Canadian and international energy projects. Grâce à ce financement ciblé, les entreprises canadiennes intègrent de nouvelles
Companies
technologies,
can take
lancent de
action
nouveaux
to
produits
invest
pour
in new
diversifier
technologies
leur
and new
marché,
products
s'assurent
and
de jouer
diversify
un rôle
their
dans les
markets
chaînes
and
d'approvisionnement
play a
nationales
decisive
et
role
par
in the
ces
national
améliorations
supply chain
participent à des missions commerciales partout
and
dans le
improve
monde.
outcomes for trade missions across the
Our
globe.
investments are also protecting workers, providing relief to nearly 37,000 Canadians during this period of uncertainty. So far, they've prevented more than 14,000 Canadians from losing their jobs. More broadly, across our economy, employment is rebounding after the early impacts of the trade war. More than 120,000 total jobs have been created since March. What we're doing today is to reinforce that momentum with new strengthened measures to accelerate the transformation of the Canadian steel and lumber industries, to build strong domestic demand for their products, and to empower their workers and businesses to seize new markets at home and abroad. So these new measures focus on three core objectives. First, to further limit foreign steel imports so as to increase domestic demand for Canadian steel producers. Second, to make it easier to buy and build with Canadian steel and lumber. And third, to invest in workers and businesses so they have the tools and the resources that they need to drive this industrial transformation. So let me start with limiting foreign steel imports to ensure that our steel producers have a bigger share of our market. Doing so will unlock hundreds of millions of dollars in domestic demand for those producers. We will reduce tariff-free steel imports from non-free trade area partners from 50% of 2024 levels, as it is today, to 20% of those levels. This will open up more than $850 million in new domestic demand for Canadian steel. Second, we will reduce tariff-free steel imports from non-CUSMA free trade area partners from 100% of 2024 levels to 75% of those levels, unlocking more than $540 million in additional market access for our producers. We'll impose a global 25% tariff on targeted imported steel derivative products, such as wind towers, prefabricated buildings, fasteners, and wires, to grow demand for Canadian-made steel. Those products as a whole represent about a $10 billion market. And we will toughen our broader compliance measures to prevent foreign steel dumping. To do so, the Canadian Border Service Agency will be equipped with a dedicated steel compliance team, enhanced detection of false declarations, and expanded online reporting tools. Our temporary horizontal remission of Canadian tariffs on imports has helped Canadian businesses deal with the early impacts of those tariffs. However, over the longer term, such broad remissions would only hurt Canada's steel sector. So to move away from relying on imported steel and to give Canadian companies time to adjust their supply chains to use Canadian steel, those temporary remission measures will end on January 31st, 2026, for steel used in Canada for manufacturing, food and beverage packaging, and agricultural production. Now, the second broad way to drive transformation of our strategic industries is by becoming our own best customer. So we'll build big with Canadian suppliers, investing in roads, bridges, homes, and community centers. A bit later this year, we'll implement that Buy Canadian policy, which will ensure that Canadian materials, including steel and lumber, are prioritized in all contracts over $25 million, and that this applies across federal grants and contribution programs, especially those in infrastructure. To maximize the use of Canadian softwood lumber in housing and infrastructure, we will prioritize shovel-ready multi-year projects that can begin in the next 12 months using, of course, Canadian wood. With a funding allocation of roughly $700 million next year, Build Canada Homes, our new federal home building agency, this alone will create $70 to $140 million of new demand for Canadian wood products and attract private and provincial capital to multiply that impact. In order to build on that, I'm announcing today that we will make it more affordable to transport Canadian steel and lumber across this country by cutting freight rates for transporting steel and lumber interprovincially by 50%. We'll do that through funding directly Canadian National and Canadian Pacific Kansas City Railways. And finally, we will increase protections for Canadian steel and lumber workers and those businesses so they can adapt and seize new opportunities. We'll help employers retain workers by expanding our earlier supports and enhancing our work-sharing programs, increasing income replacement ratios, income replacement benefits from 55% to 70%. We will also provide an additional $500 million to the Business Development Bank of Canada's Softwood Lumber Guarantee Program to ensure that companies have the financing and the credit support that they need to maintain and restructure their operations during this period of transformation. And similarly, we will deploy $500 million in funding under the Large Enterprise Tariff Loan Facility, specifically for softwood lumber firms, the larger ones facing liquidity pressures. We'll make it easier for the forestry sector to access federal support by establishing a single window for applications, a one-stop shop to help companies navigate our broad suite of support programs. And lastly, we will launch a Canadian Forest Sector Transformation Task Force that seeks input and recommendations from provinces, territories, and industry on how to seize new opportunities in softwood lumber and create new growth in the sector. Ces mesures de soutien jumelées à celles mises en place plus tôt cette année permettront
combined with those implemented earlier this year, will allow Canadian steel and softwood lumber producers to benefit from access to a domestic market representing hundreds of millions of dollars. In fact, over $1 billion. It will create new opportunities for workers as domestic demand increases, and will provide businesses the support that they need in order to adapt to the ever-changing context. We hope that companies in the steel and lumber sectors will be able to retain the resources and talent they need in order to build the facilities they need to continue contributing to building Canada strong.
The hundreds of billions of dollars of infrastructure and housing investments that Budget 2025 will unleash will create significant demand for Canadian steel and lumber, as will our new trade and investment partnerships around the world. Last week, I was in Abu Dhabi, where the UAE announced their decision to invest $70 billion in Canada. In Johannesburg for the G20, we launched discussions towards a Canada-South Africa Foreign Investment Promotion and Partnership Agreement that will deepen investment between our two nations. And we agreed to launch comprehensive free trade talks with India, the world's 5th largest economy. Nous avons entamé des négociations commerciales avec
initiated trade negotiations with the UAE, Philippines, and Thailand. And we are working on the finalization of other agreements. This is in addition to the agreements that our government has already signed with partners in Asia, Europe, and Germany. Countries around the world are looking to invest in Canada and build together with us. We are making strategic investments that are required so that we can produce and export more of what the world needs. That's Canadian steel and Canadian softwood lumber.
The Canadian steel and lumber industries will always be at the heart of Canada's competitiveness, our security, and our strength. These are sectors that reflect our country's character, resilient and forward-looking, with a history of reinventing themselves at pivotal moments. Et à ce moment charnière de notre histoire, le Canada passe
at this turning point in our Canadian economy, we are moving towards independence and resilience. We can give ourselves much more than any foreign government could ever take away. We are building a single Canadian economy instead of 13. We are building together projects that are in the national interest. We are making unprecedented investments in our security economy, and we are diversifying our trade relationships.
We'll build Canada strong with the workers and the resources that build our communities strong. Canadian workers, Canadian steel and lumber. With them, we'll build Hamilton strong, Sault Ste. Marie strong, Saguenay fort, Miramichi fort, for Canada for Canada strong. Thank you. Merci. I look forward to your questions.
Thank you, Prime Minister. We're now going to begin the question portion of the press conference. We've got about 20 minutes for question. Première question, Catherine.
Good afternoon, Prime Minister. Kate McKenna with CBC News. How do you explain to your caucus, particularly caucus members who might be quite hesitant, that your government is going to be working with the government of Alberta potentially towards a pipeline deal?
Well, the first thing is I'm blessed to be a member of a fantastic caucus, a caucus that represents every province in this country, caucus members from the north, the largest women's caucus in Canadian history, the largest Indigenous caucus. So we have a diverse caucus in all respects, and we enjoy a very open and engaged dialogue. And I will say specifically to today's announcement, not tomorrow's announcement, I'll say specifically to today's announcement, that our caucus members in Hamilton, in Sault Ste. Marie, in Quebec, in BC, across this country, in Atlantic Canada, New Brunswick, those caucus members have a very good sense of what's going on in the steel industry, in the forest products industry, and they've helped shape this package, as have members of industry, unions, and others. With respect to tomorrow's intended announcement with Alberta, the Memorandum of Understanding, it is about much more than one thing. It is, and fundamentally, it's about building this economy. It's about making Canada more independent, and it's about making Canada more sustainable. So I would suggest that we wait until the full announcement is made tomorrow so you can see it in the round. En français, en ce qui concerne le caucus,
in French,
j'ai eu la chance
about the
d'avoir un caucus
I'm lucky to have a very diverse caucus with members in every province across Canada. The largest women's caucus in Canada's history, the largest Indigenous caucus in Canada's history. It is an open caucus that has good discussions, and caucus members across the country, from BC to Nova Scotia, including in Quebec. And they have informed this announcement today. They all know the situation in the steel and lumber sectors. Second point, when it comes to the memorandum of understanding with Alberta, that will be the subject of tomorrow's announcement. The MOU is bigger than just a pipeline. At the foundation, it's an MOU that will strengthen Canada, and that will strengthen Canada's independence and our economy's competitiveness. We will be talking about all the aspects tomorrow, and we'll be able to look at that together.
My question is on U.S.-Canada trade. You've said that you want to get the best deal for Canada and that you're not rushing to any sort of deal. Do you get the sense that other countries regret the deals that they've made with President Trump?
It's a question for them. Look, I think this is what I'll say about other countries. Every country wants to do a deal with Canada. Or if they have a relationship with Canada, they want to deepen that relationship with Canada. And this is a real opportunity for us. Of course, we want to further improve the existing trading relationship with the United States. We stand ready to re-engage when they are. But at the same time, we're going to do a few other things. First and foremost, build this economy, to be masters in our home, mettre chez nous, and invest to make sure our strategic industries are there when we need them. And then secondly, to develop those commercial relationships abroad. And I think you're seeing, given the scale of agreements that we're concluding and launching, and the time frame, and I'll make one last point and then pass to your colleague, if I may, which is, when we're announcing these free trade deals, for example, with India, the start of the intention for negotiations, or with Thailand or the Philippines as three recent examples. The intention is to conclude these in a year. Okay, this is not let's have a 5 to 8 year long process. Let's focus. Let's take the opportunity. Let's diversify. Let's build out, and that itself will start to seal. We have to conclude these, obviously, but we want to have, and a final point on it, if I can, sorry, I think I'm already beyond my final point, but this is one of the many reasons why we want to make sure that we maintain the capacity in our steel industry, in our lumber industry, in our aluminum industry, and other strategic industries, and the workers as much as possible, like in their roles and their jobs, because demand is coming. We're creating that demand, and that's a big part of what this announcement today is about. Merci.
Bonjour, M. Carney. Mylène Crête de la presse. Pourquoi ne pas, pour l'industrie du bois d'œuvre, pourquoi ne pas avoir annoncé un plan de sauvetage avec une subvention salariale comme c'était demandé?
Why not have a plan with grant as requested?
Au fond, il y a des soutiens pour les
there are
travailleurs
supports for workers in the lumber sector.
De niveau de remplacement
given
des salaires.
Change in salary replacement, and that's for lumber workers, and that includes also steel workers. In that context, it's more cost-effective and easier to keep individual jobs.
With
the discussions that we've had with companies in the sector,
le ratio
the ratio
jusqu'à maintenant
était
up to now
55%. Was 55%.
C'était trop bas. Alors,
in fact, that was too low.
Nous allons l'enlever à 70%.
increase that to 70%, and that will help a lot.
Le conseil des sociétés dans le secteur.
And that's based on advice from companies in the sector.
Est-ce que vous avez terminé? Oui.
Oui. Je dois terminer maintenant.
Okay,
La deuxième question porte sur la semaine prochaine. Est-ce que vous allez aller aux
Next question
États-Unis?
is about next week. Will you go to the U.S.? And if so, do you plan to meet with Donald Trump?
En effet, oui. Oui et oui.
Vous allez aux États-Unis?
Oui,
and
oui,
yes.
oui, il y a un événement. Et oui,
Yes, there will be an event.
C'est planifié d'y aller
And there are plans
l'événement de
to
la
go
Coupe
to
mondiale.
that event,
C'est un événement
the World Cup event.
Comment on dit, on choisit les matchs, en effet, les groupes.
It's an event where matches are chosen, where the groups for the matches are chosen.
Sélection. Tu m'as compris, monsieur.
Match selection. I hope you've understood me.
Sélection. On va sélectionner les groupes pour la concurrence. Mais on va avoir une conversation. Nous avons eu une conversation, hier, par exemple.
Have a conversation.
J'ai eu des conversations avec lui.
I've had conversations with him already.
No. I had a conversation. I went back and forth. But look, this is the kind of thing I didn't want to get drawn into, which is every little exchange. There are substantive meetings and conversations and negotiations, and that's not what I'm alluding to be clear. And next week, next week is an important event for Canada because we are one of the co-hosts, as you know, of the World Cup. And I'll be participating alongside President Trump, the co-host, and the FIFA president. There'll be the selections of the countries for the various groups, Canada included, and I'll see the president around there. But again, I don't want to over-signal thing. This is something I'm trying to, what matters is the negotiations when they re-engage. They haven't re-engaged yet, so that's the fundamental point.
Next question.
Sorry, can we wait?
Next question. Michel.
Bonjour, Monsieur Carnier. Michel Sabat, la presse canadienne.
Oui.
Que dites-vous aux écologistes, y compris vraisemblablement dans votre propre caucus,
It
qui
seems
sont
that
inquiets par
in your
l'idée d'un
own
projet de
caucus seem to
l'éoduc vers la
be
côte pacifique?
concerned by an oil pipeline project?
OK, premier point. Demain, il y
Well,
aura
first of
une
all,
annonce.
there will
Il y
be
a
an
plusieurs
announcement tomorrow.
aspects dans l'annonce.
And there are
C'est pas le
several
moment
aspects to that announcement.
de faire l'annonce avant
And
l'annonce.
now
Mais il y
is
a
not the
plusieurs
time to
aspects.
make that announcement ahead of
Et,
time.
premier point. Deuxième point.
That's the
En ce
first
qui
point.
concerne
Secondly,
tous les projets à l'échelle
as
nationale,
concerns all national projects,
nation building, en effet,
the nation-building projects we've talked about,
alignés à nos objectifs climatiques,
they're all aligned with our climate objectives.
y compris, par exemple, les projets de GNL.
This includes, for
Par
example,
exemple, les
LNG
projets de
projects,
GNL, au Colombie-Britannique, qui
LNG
sont
projects
les
in
plus
BC
propres, les plus durables
are the
projets
cleanest
de
and most
GNL presque,
sustainable
du
LNG
monde.
projects
OK?
in the world.
Alors, s'il y aura un oléoduc,
So if
il
there
faut
is
avoir
an oil
une
pipeline,
combinaison avec des grandes initiatives
we need to have that in combination
Mais
with
on peut
our climate
avoir-
initiatives.
on peut discuter
But
tout
we
cela
can
demain.
talk about all of that tomorrow.
Question suivie, pardon.
Mais promettez-vous à l'Alberta d'annuler
Do you
l'interdiction de la circulation des pétroliers
Have you
sur la
promised
côte
Alberta
ouest, le tanker
to
ban?
remove
Et
the
comment est-ce que
tanker
vous allez
ban
faire
on the west
accepter
coast?
ça à la
C'est une que-
Colombie-Britannique?
Messieurs, c'est une bonne question pour demain.
That's a
Mais
good
je vous la
question
pose
for
aujourd'hui.
tomorrow.
Oui, je vais
today?
répondre demain. Je
I'll
vais
answer it
répondre
tomorrow.
demain parce qu'il faut... OK.
Next question.
I'll answer that tomorrow.
Hi. Nujura Melise Bloomberg. Today you've announced tariffs today on the U.S. for the first time, or they'll affect the U.S. for the first time since you pulled back retaliatory tariffs. How do you think this will affect the prospects of a trade deal with the U.S., and are you worried about retaliation?
So I think the first thing to say is that what we have done is to put in place adjustments to remissions and tariffs on certain steel derivative products, as you know. And so these are products that, derivatives is a fancy name for products that are substantially comprised of steel. And it is a much more targeted level of that steel than, for example, the United States has done with their steel derivatives, which is quite broad application. The U.S. looks to calculate the proportions in steel. That approach is global. It's global. It's not targeted at the U.S., okay? So that's the first thing that's very important. So it's a global approach, which is creating some space for Canadian steel producers to fill in. First point. Second point, with respect to the changes we're making in tariffs, so for non-free trade countries, going from 50% to 20%, the sort of tariff rate quota, this is Bloomberg, so I can talk like that, right? And for free trade countries, going from 100 to 75%, the U.S. is not included in that. So there's no change in the tariff for the U.S. or for Mexico in that regard. So I think that answers the question.
Prime Minister announcing measures to increase protectionism on steel products. He downplayed it, but these are tariffs, new tariffs going on U.S. goods. For example, the steel derivative products will include wind towers, prefabricated buildings, fasteners and wires. Bloomberg talking to a government official who said about 40% of that stuff comes from the United States. So this is a 25% levy on those products. So it is a new tariff on U.S. goods. Also announcing aid for the lumber industry, $500 million, a loan program administered by the Business Development Bank, and also going to work with the railroad companies to subsidize movement of goods on both industries, steel and lumber. Thanks very much for watching Commodities.